Can you hear me now? Can anyone hear me? Can anyone hear me? All right, all right, all right. Yeah, sorry for the shouting, slow down. Yeah, so I want to know where you're watching from. Where are you watching from? What part of the world are you joining us from? All right, let me know in the comment section what part of the world are you joining us from? Where are you watching from? All right, okay, I can see Nigeria. Okay, where are you watching from? Bhuta from India. Dio from Lagos, Nigeria. Okay, fully for God, Ibadan. Awesome, 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 awesome. Yeah, so great to have you guys here. Today's session would be very much interactive, and this is to get us very much engaged and ask questions as the class goes on, and then you know you get to learn. All right, great. So today we'll be analyzing Euro USD. All right. Um, and then definitely when you want to kick off analyzing the financial market, you always want to ask yourself, what is the current market structure? It's a very important question because it helps you to get started on what to look out for. All right, understanding the current market structure helps you to know what next to do. Okay, so and then to have more significant analysis, we look at the higher time frame. Okay, and that's because the higher time frame poses more significant feedbacks from the market than the lower time frame. All right, however, each time frame has its own significance. Okay, and then using these time frames, comparing them is what we call the multiple time frame strategy, where we get to look at the higher time frame, compare it to the lower time frame, what is happening on the higher time frame, what is happening on the lower time frame. All right, and then to make informed decision. Okay, so we will be starting with the weekly time frame. All right, the weekly time frame. Okay, and from the weekly time frame, let's map out regions that we are looking out here. To be able to identify these regions clearly, you might want to change your chart to a line chart. All right, so the line chart helps you to see the edges. Okay, the edges of where price had once operated before taking a turn. All right, yeah. We had seen price here before. Okay, good. All right, so currently we can see what price has done. Price having been in this on the weekly time frame, it's obvious now that price broke out from this range on the weekly time frame. Okay, and we can see that over time price broke out here. All right, price broke out here, okay, and we see that price kept going down, okay. Now this is the weekly time frame. The question is, what next? Then we'll now pick interest in looking at what is happening on the lower time frame. All right, what is happening on the lower time frame? So let's go back to the candlestick, and then let's go to the lower time frame. So the daily time frame. The pair is Euro USD. Euro USD. All right. So when we look at the daily time frame, we can as well see that on the daily time frame, the market has experienced a continuous fall in price. Okay, a continuous fall in price. All right. Okay. I'm drawing a trend line. All right. So definitely we see that on the daily time frame, there has been, the price has been moving on a downward trend. We can see what price did from here. Went up, came down, went up, came down, went up, came down, went up, came down a bit, went up again, came down, went up, came down. All right, then went up here again, then came down here, then went up. Okay, now this is giving us some insight into the pattern via which price is moving on this chart. Okay, our price has been moving in a wave-like function towards the downside. All right, it's descending, a downward trend. Now currently, now that we see that we have price at this level, we saw price came to this level, we saw price hit this level, this level, this level, this level, this level, and as price touched each and every one of this level, there was a reversal. Okay, there was a reversal, which will now give us an insight into expecting some level of pullbacks here. All right, here where price had come to, where price is at present. Okay, where price is at present is giving us that insight that there would be a pullback at those price levels. Okay, so let's look at a lower time frame, much lower than the daily time frame, to be able to decide what is currently happening in the market and how best to position ourselves. So we look at the 4 hours time frame. So you discover that even on the 4 hours time frame, the market still gives that feel of a downtrend, as we can see. All right, so let's zoom in here to see what is currently happening. All right, good. So if you see what price did here, when price got to this level, what happened? It started dropping. When price got to this level, what happened? It started dropping. Now look at what price had gotten to and what is currently happening. Okay, and when you look closely, you would see that there are levels of support already created at this level. If you look at this place, this is a level of support. All right, these are minor levels of support and resistance. Okay, this is another minor level of support and resistance. Yeah, so if you look at it now, if we say that this levels now is like a support level, all right, this level is a support level, okay, and price broke out of this level. Look how far price came. Okay, now price went up into that level where it broke out from, and currently now price had broken out of that same level. Okay, price breaking out of this same level now is giving us that bearish momentum move already from what we can see here. Given that this level is a key support, is a key support level on the 4 hours time frame. Okay, why? Because it had withheld several what is it called, price level at this same level here. Okay, but when you now see what price is currently doing here, you would see that it's are we together? Sorry, are we together? Okay, so finally we are together. All right, so you can see what is most likely happening here now. Price would retest this previous support level, all right, is testing it to know if that level is still strong enough to hold price or not. All right, if the level is not strong enough, then price pushes up and goes back up. But if the level is strong enough, what happens? Then price just tests the level and then continue in the opposite direction, which is the bearish direction. All right, so after every breakout, there are 80% chances that there would be a pullback. After every breakout, all right, there are 80% chances that there would be a pullback. Okay, good. So when you're looking closely here, after every breakout here, we are expecting a pullback and then a continuous fall in price. So if you look at what happened here, after a breakout here, price came down, all right, and price retested this level, okay, before price started falling again. All right, so what are we seeing here? I would rephrase. So for those who are saying we are not together and they've not gotten what I've said in the last 25 minutes, you need to pay attention, or you go over to watch the video again. All right, stop spamming the comment section. All right, so I would go over it here. When price, we've already established the market structure, which is the fact that the entire market structure is in a downward trend. All right, as we can see. the market structure is in a downward trend. Okay, now when you now observe clearly that we map out this region showing how price ranged between this region within the downward trend, all right, and finally a breakout was experienced here. Okay, a breakout was experienced here. Okay, and then we see how price through this breakout came to retest this region here. All right, let me use the brush tool to draw it. See, price broke out and came back to retest this region. That's why you see the price coming to touch this level. All right, and then price now what? Price now started going down. Okay, when price came down to this support level, what happened? Price went up again, broke through that support turned resistance level, and had a reverse and broke out of that support level now. Okay, and now here is what we are seeing, that price came down and currently price is retesting. Okay, price might touch this level, retest to check the strength of this level. If it still remains strong enough, and it would resist it, and then we can see price going down. All right, and if price is not, if the price level here cannot resist price or cannot hold price, what happens? Price break through, hit our stop level and probably continue going up. Okay, good. So it is very important for us that while we are looking at a higher probability of price going in the other direction, we should also be aware that we are not in control of the market, and the market can turn around at any time. All right, so should the market turn around here, your stop loss would be there to take you out of the market and prevent you from losing further. All right, good. So here now we look to shorten the market from this retest. All right, good. Let's look at the pounds. Let's look at the pounds. Okay, let's look at the pounds. So for the pounds, let's analyze from the weekly time frame. All right, let's analyze from the weekly time frame. So someone is asking a question: how do we know it will resist? That is why I said you don't have control of the market, and it is important for you to have your stop loss. So should the price level not resist, then your stop loss will stop you out so that you don't lose more than you can bear. All right, so on the weekly time frame of the pounds USD, number one, yes, it is 80% probability that there will be a retest after a breakout. Yes, you are paying attention. All right, so on the pounds USD, on the weekly time frame, let's map out levels of support and resistance, because this would help us to know where price is at a particular time. All right, good. So now here we have the first support level, the first resistance level. You can see price came here and touched this level, came down again, came here and touched this level. All right, now someone will ask, if price is going back to this level, now look at it. Price came up here. Pay attention. Price came up here. all right, touched this level, could not break out. That's a resistance level. Price came down, came up again to that same level to test that level. It could not break out. Price came down. All right. Now let's now assume that price is going to touch this place the second time. I'm sorry, the third time. All right. What comes to your mind? What comes to your mind is that there is a chance that price would still be pushed back from here. All right. And there's also a chance that price would break out. Okay. Now, a chance that price would pull back from here would be gotten from the insight that price has once gotten to that level twice and was resisted. Okay, that is where you would know that, oh, I'm expecting a resistance level here. All right, and you prepare for it. Okay, so if you are expecting a resistance level, say, okay, let's say price is now going to come here now, because we now say I'm most likely expecting a resistance level here. Why? Because this level has been resisting price for a while now, twice. Okay, and price is coming to touch that place the third time. So there's a chance that what this level can still act as the strong resistance that it used to be. All right, and prevent price from breaking out. However, there are also chances that price will break out. Why? Because ceteris paribus, all things being equal, given the fact that we are not in control of the market. All right, you as a trader, okay, as an individual, cannot control the market. There is just one thing that you can control, and that is your emotions. All right, your emotions houses your greed and houses your fear. Okay, the fear of missing out, the greed of making enough, making a lot with little amount of money, and also in short while. All right, so because you are not in control of the market and you cannot be 100% certain that this level would resist the price, you can't be 100% certain. All right, but you can only have a higher probability or a higher probability of the occurrence of a resistance level at this level. All right, so in a case of eventuality that price break through your expected resistance level, what happens? You should, with risk management knowledge, put your stop loss above your entry level, so that even when it breaks out of the resistance level, it stops you out when it gets to a particular level above that resistance level, and you are prevented from losing more than you can bear. All right, this is very, very important. Risk management is very, very important. Sometimes it is not about the fact that you cannot trade. It's not about the fact that you are not seeing these market opportunities. It's not about the fact that you have the potential of being a good, skilled trader. All right, it might just be one thing, and that is the thing that you can control but you have failed to control, which is what? Your emotions. However, many lose money in the market because instead of controlling their emotions, they want to control the outcome. They want to control the outcome of the market. All right, they want to control how the market should move. All right, they want to make a lot. Someone with $100 account want to make $1,000, thereby leveraging, over leveraging, and before you know, you blow up your account. All right, and that is why it is important that you take risk management as an essential factor. All right, and not just risk management as essential factor, but have it at the back of your mind that you have no control of the market, but you have just one thing that you can control, and that is your emotions. This is very, very important. Put it in your left hand. Don't use it to hit. Exactly. Because it would determine if you would be a sustainable, profitable trader. Because definitely there are a lot of profitable traders, but in the short term. Traders that only make money in a month and 2 months, and before you know, the third month they are bankrupt. Why? Because they are prone to risk, because they risk so much of their account. And that is why I tell traders who are newbies, even experts who have the skill to identify their entry level and their exit level, never to forget that risk management is very, very key to the success of every trader. And it is not about how much you make on a trade. A lot of traders boast of their short-term return, but never knows that the present profit or present results does not guarantee future performance. All right. It is not about how much you make. It is about how long you last in business. And you can only last in business when you remain profitable. Okay? So when you focus on lasting in business, you will last longer. When you focus on making profit in the short run, you will not last at all. Okay? Good. So, when you look at this level now, this is a resistance level. This is another resistance level. Alright? But what has price done here? There has been a breakout at this level. You can see a breakout. It's an obvious breakout. Okay? It is an obvious breakout at this level. Alright? An obvious breakout at this level. Now, we can see what price is doing here. We can see what price is doing here. After this breakout, what do you see price is doing? A pullback. Alright? And this pullback there's a sign of rejection from the above here after a little pullback. Alright? And now, what are we expecting? After a pullback, might expect a continuous fall in price. But then, let's go to the lower time frame to see clearly how to position ourselves for profit on the pounds dollar chart. All right. Good. So we can see what is clearly happening here right now. All right, check this out. We can see what is clearly happening here. After a breakout has occurred, then a pullback. Okay, a pullback currently ongoing. Okay, now there are two things that can happen here. We can see what price is doing. Price has broken out from this region and come down here. Now price had gone up, all right, to this level. Okay, price might still extend up a bit before it continuously fall, all right, or when it gets here, it breaks out. Okay, so we would go further to the 1 hour time frame to position ourselves better. All right. Let's go to the 1 hour time frame. Okay, let's go to the 4 hours time frame. Okay. Yeah, so you look at this now on the 4 hours time frame. Look at what we are seeing here. All right, clearly we are seeing price, let me zoom in. Okay, so look at what price is doing currently at this place. So here you want to watch out for this level. All right, you want to watch out for this level. Yeah, you want to watch out for this level. Okay, you can see what price did at that level. Observe the candlesticks. Okay, observe the candlestick closely. Look at it. Observe this candlesticks within this place. If you see, this fully bodied candle came and closed below these previous ones. All right, this candle here closed below these candles. Let me. Okay, good. This candle here came down and closed below this. All right, this is something to watch. All right, something to pay attention to. Okay, good. So definitely I'm seeing some questions that says, which time frame is suitable for entry in the intraday trade? Yes, 1 hour time frame is suitable for entering an inter trade. Yes, intraday trade 1 hour is suitable for entry. Position trade daily is suitable for entry. All right, daily is suitable for entry. So when you look closely at this candle, all right, good. I'm trying to zoom in so that we all can see. So I want to see something here, which is areas you need to pay attention to. You can see price resisting here, and then this wick to the top showing some level of significant rejection. Now observe the next candlestick that appeared before it. A very fully bodied bearish candle that closed below these previous candles, this and this. It closed below them. All right, now this passes a message. It says high volatility coming in. All right, high volatility coming in, giving a significant signal that this level good, giving a significant signal that this level is highly volatile. All right, and movements on this level will be extended here. So what do we anticipate from here? A continuous fall in price. All right, that's what we anticipate from here. A continuous fall in price. Okay, then in this kind of trade now, where do you want to put your stop loss? Where do you want to put your take profit? All right, we would say for this kind of trade, it's best your stop loss stays on the next. Since we are shorting, the stop loss would stay on the next resistance level. All right, and your take profit will go to the next support level. So we are taking our entry level here entry level. All right, our entry level here. Okay, and then our take profit here. Okay, so we say take profit, and then your stop loss would be okay. Good. So someone is asking, also remember that news can change. So definitely news can change market direction. All right, because news, some very significant news are create high volume, high volatility in the market. All right, so they can always change market direction. So which is important that you, if you are not a swing trader, you want to avoid trading out few hours to the news or few minutes to the news. All right, except you are an intraday trader. Okay, so but if you are not an intraday trader, then you can swing for a long term. All right, sometimes news just creates short-term volatility, all right, without significant long-term impact. Okay, so this is like the outlook, all right, on the pound USD. Someone is asking, what else? Okay, is it advisable to trade late at night? It is not. So there is no rule for when to trade, night or day. Okay, you can trade at any time, and that is why the market is 24 hours every day in 5 days, Monday to Friday, 24 hours. All right, so you can trade any time of the day. However, it now depends on you, because during the London opening hours, there are already volatility in the market. The US opening hours, there are volatility in the market. Okay, you don't want to be trading when there is less volatility in the market. All right, if there is less volatility in the market, your trade might not move significantly. There might be a lot of lagging, and of course, the day can catch up with it. Another session opens and volatility moves the market in the opposite direction than that you have been trading. All right, so you don't want to be caught in a crossfire. Okay, so you want to only trade within in those time frames that market is opening in London, in New York. All right, good. So I would to my own best interest, I trade when there is more volume in the market, when there is volatility in the market. The US time, the London time, I trade. Okay, someone is asking, what is swing trade? So swing trading is when you are holding a particular position for days, week, months. That's swing trade. All right, for days and weeks, that's swing trade. Should your take profit and stop loss exceed your entry level? Yes, of course. All right, it should always exceed your entry level. So if you look at it now, here is my entry level now. Look at where my stop loss is. My stop loss should be above my entry level if I'm shorting the market. My take profit should be below my entry level, okay, if I'm shorting the market. All right, good. What else again? Someone is asking, so why is the stop loss at the higher price? Why they take profit at the lower price? I'm confused. Okay, so what? Because we are shorting, because we are selling. All right. So which means we are selling at a higher price. All right. Here. So anybody that buys now, we can decide to take profit here. Okay. So we make money from the difference. If you look at it now, we are selling at 1.1, okay, and we are closing our market at 1.08, which means we've made a difference approximately to 0.1 from this trade. Okay, good. Yes, spreads are usually high at night. Exactly. Market movements more active in London and New York session. Yes. Someone says, please, why I've explained that. Um, Someone is asking what time frame is suitable. What time frame is suitable for scalpers for entry? Yeah, depending on you, but scalping, you are looking at 15 minutes, 5 minutes, 1 minute time frame. All right, so max 30 minutes time frame for scalpers. Yes, you can take profit at the next available support. Yes. Okay, someone is asking, what is London trade and of is it afternoon? So it depends on the country that you are from, all right, and your time zone. So you might want to check your time zone. London time session to, if you are East Africa time, it will show you what time is the London time session opening, you get, in your local time. All right, good. So I have an assignment for everyone here today. Who is ready for my assignment? Who is ready for my assignment? Let me Who is ready for my assignment? Let me know in the comment section. Are you ready for my assignment? Are you ready for my assignment? Are you ready for my assignment? Let me know in the comment section. Are you ready for my assignment? Let me know in the comment section. All right. Yeah. Keep it coming. Awesome. So, from what you have learned today, okay, from what you have learned today, support, resistance, multiple time frame strategy, I want you to analyze the gold market. All right, analyze the gold market. Okay, analyze the gold market on your own. Analyze the gold market. All right, if you've never traded before, go to the Octa FX website, sign up, open an account, download your MT4, and get started. Okay, good. So with what you've learned, you might want to go over the recording again, then you run your own analysis. All right, so thank you very much for joining us. Don't forget to tap the subscription button and click on the notification bell. Be the first person to be notified of our next session. All right, we are bringing this to you in order to increase your knowledge in forex trading. All right, and I believe you are getting value from this. Our next session is on Thursday next week. Do join us, and do your assignment. All right, thank you very much, guys.